Good morning everybody, it's Christopher from Serene Education with the 4 majors notes update for the 7th of January 2014. Just a quick wrap up of the 4 majors this morning, starting with Euro against US dollar. Looking at the daily here, past couple of days we've seen price falling back after the resistance level highs at the fib 61.8 level on the monthly. As long as the euro fails to break above this, then we should see price consolidating, with the outcome potentially looking for further lows. You can quite clearly see the past couple of days we've seen a consolidation. The indicator box over here pretty much not very directive. A lot of negativity intraday, primarily as we have seen price falling sharply recently. We do have a lot of news out today for euro. We've had the German retail sales month-to-month figures, which came out a lot positive than the forecast. We have the German unemployment change figure later out this morning, as well as the CPI flash estimate year-on-year figures for euro. So news out this morning for eurozone, still consolidative at the moment. We are consolidating. There has been a small support level being forged on the daily. If we manage to see the news coming out favorable and it managed to stay above this level, then we could see price reattempting the highs. But we've dropped down to the 4-hour time frame. You can see prices trading below the institution moving average now, which it hasn't been doing for some time, and that's a negative setup. We have seen a lot of negativity recently, and that's primarily due to price failing to actually break and close higher than the 61.8 February level on the monthly. So as long as it's trading below that, we should be looking for negativity. Onto sterling. Here again, you can see the monthly fib 38.2 level. Price testing this over the past number of months. In fact, through December we actually had a breakout. However, we've had a pullback since the past week or so, and you could see yesterday we've seen price trading below the actual fib level. So to see any further buying opportunities, we do need to see price closing higher than the 38.2 level. Failure to do so, then we should start looking for negativity, and you can see the indicator intraday looking for negativity, and the R squared is complementing that. So as it stands at the moment now, you can see yesterday's candle indecisive, almost a hangman or hanging man candlestick formation at the underside of a major resistance level. We do need to see a bearish engulfing candle to confirm this is now a negative setup on the candlestick formation, and if we do see that, then we could see price returning back towards the price of one resistance level breakout levels, roughly around the 1623.11 and change. US dollar Swiss franc. Here we've had price finding support at the weekly fib level for a sustainable month, and you can see the US dollar has rallied recently. The long-term sentiment is still very much negative on this one. We're not out of the woods in terms of positiveness. However, you can see the buying sentiment coming through on the intraday side of things, and we have seen price moving higher or edging higher over the past couple of days. So we drop down to our 4-hour time frame. You can see the institution moving average now below price. Everything's in favor for upside. The only thing we don't have in our favor is obviously the OSMO indicator. We would need to see price trading above the current level, resistance level highs, which is here at 90.64 and change. Get above that, and then we can start looking for cleaner air or buying opportunities towards the weekly fib level at the 50% level, which is a healthy 323 pips away. So patience is a virtue here. We've just got to be very, very patient. As I mentioned yesterday, we have non-farm payroll out the end of this week, and we also have interest rates announcements on Thursday. So a lot of news this week in particular. However, that could then stem or look or show us the direction for the foreseeable future. So just got to be patient, wait for price to actually show us her hand, and then we can trade it. Last pair of the day, US dollar Japanese yen. You can see we've also seen consolidation. Price being very, very bullish over the past couple of months after the breakout here at the monthly fib level of the squeeze pattern that we were in, a major wedge pattern formation for a number of months. We had a breakout, a break and close higher than the monthly fib, and since then we've seen nothing but positiveness for the US market or the US dollar against a very weak yen. However, consolidating at the 61.8 monthly fib level, and you can see that if I just zoom in, you can see a lot of negativity. Price is pulled back now to a price of one resistance level, the current resistance level high, and you can see that we had a bearish engulfing candle yesterday. You can see the indicator set up telling us there's a lot of negativity coming through, even though we are in a positive long-term sentiment move. RMO is clearly well above the zero level. However, the OSMO indicator has consolidated, as we have consolidated at the underside of the 61.8 monthly fib. So here, to see any further buying opportunities, we would need to see a consolidation bounce now, a pause at this level. So drop down to the 4-hour time frame. You can see a lot of indecision creeping in, a lot of support level around this area. you can see that the RMO is just slightly above, but the OSMO is clearly below. You can see we have a red arrow. However, the candlesticks are still very much positive. We would need to see a break lower, a nice bearish engulfing counter close lower. That would in turn need to change color to red, and then the RMO needs to drop below the 0 level. That would give us an idea. We should be looking for further lows for the remainder of this week, in particular up towards non-farm payroll, and we could start targeting potentially the institution moving average on our 4-hour time frame. However, at the moment, our consolidative, we would need to see a break, a clear breach from the mark from the actual price, and until that happens, we should be just consolidated, just be patient, wait, and sure enough, we'll get our confirmation. So just be patient, follow the rules of the template, abide by the rules, apply strong money management rules to those, and you should be very, very profitable. So that's it, short and sweet today, to the point, not much else happening, very consolidative. There's news out today, just be aware of it. We have the Canadian trade balance figures later this afternoon, followed by the trade balance figures for the US market. So not much on the charts today besides the news later this afternoon. So keep that in mind, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.